Let's just talk about the price cuts in Tesla down another 4% as you're noting in your notes is down about 19-20% year to date that they're leading the pack here, and they got a little bit of room to run, just wondering how long they can keep this up. Yeah, I mean, they're in a unique position, right? Because they have kind of the best cost structure, right? They don't advertise, they don't have dealerships. So I think they have the ability to cut prices more than a lot of their competitors. They're also obviously earlier to EVs than others, so it's a great way to really steal market share, I think, and ultimately, they also have a lot of things that kind of go in their favor. They're the biggest beneficiaries of the IRA tax credits this year, and also two of their plants, Berlin and Austin, are really ramping up, and those are going to reduce costs over time. So yeah, I mean, it looks like a big headline, right? Cutting pricing by like 20 for some of the models. It sounds pretty dramatic, but when you really look at how they can lower costs, it's really a great way for them to gain market share, and there will be some near-term pressure on profitability, no doubt, but I think the market really understands this. 2022 was a rather challenging year for the world's major automakers. The story was a little different last year as electric car prices soared to such an extent that analysts had to begin questioning the expected transition to EVs. What lies ahead for EVs, and are EVs really ready for the auto industry and its future? Well, you're going to find out in this video. Hey guys, welcome back to Tesla. The disruption in the supply chain made it difficult to produce enough vehicles to meet demand. The cost of production has since been unstable, and this may linger throughout this year. Automakers may need to change their strategy for production if they want to keep making a profit. Analysts like Tony Staber have said that EV prices will continue to drop through the decade. While this seems reasonable and expected considering the number of electric vehicles being released into the market. EV prices increased dramatically in 2022. Just a few months prior, retailers would jack up sticker prices by thousands of dollars, forcing EV consumers into lengthy waiting lists. Because consumers were prepared to spend extra to acquire an electric vehicle immediately away, used ones were occasionally sold for more than new ones. By the close of 2022, the average cost of an electric vehicle was $61,488, whereas the average cost of all passenger vehicles and trucks was $49,507 at that time. Interestingly enough, though, lithium costs are starting to decline, which will probably allow electric car prices to decrease as well. The cost of lithium, a metal used in batteries, has decreased by 20% as of February from its November peak, but it is still more than twice as expensive as it was at the end of 2021. All of them are being produced by new lithium mines, which may limit pricing. Presently, Tesla's automobiles are reasonably priced, and should the price of lithium decrease, they may become much more affordable. According to Kelley Blue Book executive editor Ryan Moody, Tesla recognized the growing competition in the industry and seized the chance. He went on to say that the average would be impacted if the top seller of a particular kind of vehicle raised or decreased their prices. Would lower prices actually result in increased sales for Tesla? Let's find out. But first, if you enjoy this kind of content, remember to subscribe, hit the like button, and activate the notification bell to stay updated on all things Tesla, even with a notable rise in electric models from other manufacturers. Although Tesla has managed to hold a 60 to 70% market share, there are rumors that its rivals are gaining ground on Tesla in the U.S. EV market. In the same time period, Tesla's EV share in the U.S. dropped from over 3/4 of the market in January 2022 to slightly over half a year later. Ford's EV market share increased to 8.4%, while GM's increased from 0.1 to 9.9. According to recent reports, the U.S. EV market is seeing a slowdown in Tesla's dominance due to the decline in January and February registration. Rise in deliveries, the manufacturer currently commands a 58% share of the U.S. EV market, according to the research. They are blaming rivals for increasing LPV sales for this fall in market share, which is somewhat accurate for established automakers like Ford. Nissan and General Motors are vying with each other for Tesla's market share and enormous profit margins. Known for their gas-powered vehicles, older automakers are stepping up their efforts to enter the electric vehicle market with stylish new designs and alluring features. According to global forecasts, the EV market will double to 160 by the end of 2025 from just over 50 models currently, having grown to 78 by the end of the year. Tom Libby, a global mobility analyst, added that despite some positive Wall Street outlooks regarding price reductions and the fact that Tesla stock has been a favorite among investors since the beginning of the year, competition pressure is forcing OEMs to move quickly, and Tesla's market share will keep declining as a result. Even now, shares have lost more than 40% of their value in the previous year. While Tesla still intends to introduce new models, rivals Ford and General Motors have seen a significantly sharper fall in one-year drop-offs of 14 and 10%, respectively. For withholding some important facts, the ID.7 is scheduled to be on sale in China later this year, and then in the US the following year. Rumor has it that the ID.7 will surpass the Tesla Model 3 as the best-selling electric vehicle globally, overtaking the entry-level model made by General Motors. Ford and Hyundai have the range to outperform Tesla and are currently closing the gap. Even in terms of software, these automakers are catching up, investing billions of dollars in cutting-edge technologies like performance-oriented batteries and hands-free driving. But unlike traditional automakers, which are only now embracing the technology, Tesla is a pure-play electric car maker and shouldn't be priced similarly. While Tesla experiences unrelenting expansion, these companies will probably replace their current gas-powered lines with electric vehicle alternatives. Elon Musk intends to acquire a substantial portion of the American SUV market, as seen by Tesla's 6 price reductions this year compared to last. Among the top 3 best-selling sport utility vehicles in the U.S. was Tesla's Model Y. Given that the Model Y's beginning price was more than twice as much as that of the market's perennial favorites, the Toyota RAV4 and the Honda CR-V, it was impressive. It's interesting to note that Tesla has decreased this pricing barrier after lowering the base price of the Model Y by 24% since January, the most of any of its vehicles. The Model Y is now eligible for a $7,500 federal tax credit for the first time ever when all-wheel drive is taken into account. A Tesla SUV with a 279-mile range can be had for $10 less than the typical cost of a new automobile sold in the U.S. right now. One of the main things driving Tesla to cut costs is the pressure it is under. For the 5th time this year, Tesla has reduced the price of its cars in an attempt to increase demand and reclaim market dominance. Additionally, the CEO of Renault said that Tesla's recent price surge cuts can be interpreted as a signal to competitors producing electric vehicles. After 4 years of declining sales, Renault's current strategy appears to be succeeding as the company's attempts to restructure and concentrate on its most profitable models are paying off. Renault sales increased by 9% in the first quarter of the year. Tesla's price reductions continue to force the carmaker to reevaluate its worldwide pricing policies. They also discussed Renault's pricing policy, according to which the business will make alliances based on the degree of competitiveness required to remain in the game, market by market and nation by country. He said that it's obvious that Tesla is having difficulty with its price reductions, and the firm is taking this as a warning. However, Tesla's stock's relative underperformance indicates that some investors are still focused on the pertinent price reductions and the purported quarterly deliveries. This is a warning flag for the manufacturer of electric vehicles and may indicate that Tesla is starting to lose control of the market it formerly dominated over the previous 5 years. Do you think sales will continue to be fueled by Tesla's price cuts? Please share your thoughts with us below, and don't forget to share your Tesla valuation with us. Please click on the following video to see more about what Tesla has been up to in the previous few days. Talk to you there.